Pat, how you doing, sir?
Man, I'm doing great. How's everybody today? Good?
Doing fantastic. Well, Pat, I want you to introduce our guest to us today. You know a little bit more than I do, so jump right in here and
Sure.
introduce our
So
new guest.
I will. So this is Kenzie House. She is from Farm Credit Mid America. She is, well, I'll let her tell you what she is, but she helped me with individuals getting loans, and she's going to help me with a personal loan on a piece of farm ground that I'm getting ready to purchase here for too long. So I thought it'd be a really good idea to have somebody get on here and we can talk a little bit about what Farm Credit Mid America has to offer for land buyers and for sellers and any other thing that they have to offer in their sister company, Rural First, and different loans and so on and so forth. So I thought Kenzie, she's a very well-respected individual within the company, and she knows her stuff. So I thought she'd be a good one to have on here, and we can pick her brain a little bit about some things.
This episode is brought to you by Basecamp Country Real Estate. If you've ever dreamed of owning your own piece of the great outdoors, now's the time to make it happen. Basecamp Country specializes in buying and selling hunting land, farms, and ranches, and we understand the land and the people who love it. At Basecamp Country, it's more than just dirt, it's a lifestyle. We are land professionals, outdoorsmen and women who know what it's like to walk the woods and work the land and chase big dreams. Whether you're selling property or looking for your own getaway spot, we are here to guide you every step of the way. And hey, if you're looking for more than just land, ever thought about a new career? Basecamp Country is hiring new and experienced agents across the country. So if you're passionate about the outdoors and want to build a lifelong dream of doing what you love, we've got the tools and training to help you succeed. So whether you're buying or selling real estate or starting something new, like a new career, head on over to basecampcountry.com and see how we can help you. And remember, here at Basecamp Country, it's more than just dirt, it's a lifestyle.
Awesome. Well, Kenzie, how you doing?
I'm doing great. Thank you, Kix, and thank you, Pat, for having me on. Yeah, like Pat kind of alluded to, I'm a loan officer here at Farm Credit Mid America. I'm specifically out of the Lafayette, Indiana office, but as we talk about farm credit, you'll kind of realize we're all over the place. So yeah, I'm a financial officer here. I live in Clinton County, have grown up in this area, and so I'm excited to be talking with you both today.
So, well, thanks for coming on, Kenzie. We sure appreciate it. Be excited. A lot of people will be excited to listen to this episode, find out, about how to go about getting a farm loan and stuff like that. So, jump right into it here, if you would. Tell us a little bit about how you got involved in the lending business and how long you've been doing it.
Sure. So, just a little bit of background. I grew up on a first-generation family farm in Benton County. So, I grew up corn and soybeans is what I knew, and my parents were first generation. So my siblings and I were very heavily involved on the farm and are still to this day. So ag has just kind of always been what I knew I wanted to do. I really never questioned that. So went on and through high school and through college, I was heavily involved in 4-H and FFA. So I showed livestock and then was heavily involved in FFA. I was a state officer for a year, which actually meant I deferred my first year of college to serve as the state president for 1 year. And so all of those things kind of led me into finding more about farm credit. Farm credit's a huge sponsor of community engagements and youth activities. So through my involvement, especially in FFA, I had kind of heard about farm credit. I always knew I liked numbers too. And so then when college came around and I was looking for internships, she was my leader up until the end of 2024. She's now our state leader. I knew her. She grew up she's from Benton County as well. And I had a conversation with her and then had an internship with Farm Credit, and I've been here ever since. So I graduated from Purdue in 2020 with an Ag Econ degree and then started at Farm Credit 3 days later. So I've been here for almost 5 years and have been on the lending side the entire time.
Awesome. Well, tell us a little the FCMA. What's that stand for? What states does it serve? Talk to us a little bit about that, if you would.
Yeah, so there is a wide farm credit system, but FCMA specifically stands for Farm Credit Mid America. So Farm Credit Mid America specifically covers Indiana, Ohio, Kentucky, and Tennessee. And then as of last year, we added on a small part of Arkansas and a small part of Missouri. So up until last year, it was the 4 full states, but we've added a few counties in Arkansas and Missouri. The Farm Credit System is in all U.S. states and territories. I might be misspeaking here, there's around 40 farm credits across the whole U.S. states and territories. Ours specifically, so the Farm Credit Mid-America just covers those few states I mentioned. But no matter which farm credit you're working with, so whether it's Farm Credit East, Farm Credit Mid-America, whichever one that is most local to you or the listeners, wherever you are, we all operate in a very similar fashion. So any of the farm credit systems, we're all ag cooperatives, so we're all customer owned. We're all led by a board of directors, which are elected by our customers and are our customers. And we are all kind of governed by the Farm Credit Administration, which watches, kind of governs how we interact within the system. So the internal, workings might be a little bit different, but essentially we're all structured and we're all structured the same way and kind of, out for the same mission.
Gotcha. Pat, I'll let you jump in here in a minute. I got one question for Kenzie.
Absolutely.
Kenzie, talk to us a little bit about, you said, you certain states, you cover the whole state, but like in Arkansas, Missouri, you only cover certain counties. So why is that? Why can you only cover certain areas?
So when we took over a portion of a few counties in Arkansas and Missouri, and honestly, I couldn't tell you which counties they were, or that they are. I haven't really dug into, that area just because we're pretty, I kind of stay in Indiana with my job. But that was a smaller farm credit association that Farm Credit Mid-America bought out. So while Farm Credit Mid-America covers, all of Indiana, right, and all or most of Ohio, there's actually another small association in Ohio that takes up just a few counties in Ohio. So not all farm credits are as big as we are here at Farm Credit Mid-America. So the farm credit that we acquired, which gave us those counties in Arkansas and Missouri, just covered those counties. So a much smaller portfolio, but we brought that into our book of business. So you might see a farm credit that just covers a quarter of a state or something like that. So essentially what we did is we just bought another system or bought another association, and that's kind of how that works. So that just means that another farm credit association covers the remainder of Arkansas and the remainder of Missouri.
Sure. So let's run a little bit through a scenario. If somebody comes to you, Kenzie, and they're looking to buy a piece of property, and I try to tell all my clients, and I'm sure Kick tries to tell his clients that, hey, having a pre-approved or pre-qualified loan, having your ducks in a row right off the get-go is kind of what you want to do. Can you kind of run as start if somebody was to first call you and ask you, say, hey, I'm thinking about getting a loan, I want to buy a piece of property or what have you, how do you start out, I guess? Just kind of run us through the process.
Yeah, that's a great question, Pat, because, you as realtors, you know this better than anyone as you're talking to these customers, but pre-approval is so important. That way, that you are qualified to borrow on what you are asking for. That part is already done. So that can help speed up the closing process too. If that person is successful with the purchase. So let's say somebody calls me and they want to get pre-approved. And it's somebody, I've never met. I'm going to take some time to get to know them. I'm just going to ask them some questions on the phone, just to kind of see what they're wanting to do. From there, we're going to talk about what the purpose is. So we're going to talk about the property that they're buying. And if it is ag use or something that fits within my wheelhouse, we will continue to run with that. There is another part of farm credit. So because we are customer owned, you have to be eligible to be a customer here. And on the ag side, so what I do, you just have to have $500 of gross farm income. So, if somebody were to be purchasing an ag property and it was their first, well, they're still eligible because that property will make them eligible, whether they're farming it themselves, whether they're renting it out, assuming they can make $500 off of that, which in the grand scheme, we all know is not a lot. They would be eligible with us. So we'd run through that. We talk about what they want. And then I would ask them for financials. So a lot of times we're talking taxes, a balance sheet or financial statement of that sort. So that's kind of just the basics. And from there, I would run it through underwriting and get a pre-approval completed. That usually takes about 2 weeks, give or take. The rural first side, which I believe Kix mentioned right at the beginning, that is our rural home lending side. So they do a lot of the rural and recreational properties. We're all under farm credit, but they just kind of focus especially on the residential and recreational side. Their process is fairly similar. They might ask for a few different things, but the beauty of what they can do is on the residential purchases, they can do it oftentimes a pre-qualification in 15 minutes that just does a soft credit pull and says, this is what this is what we could do for you. And then once the purchase is successful, then they'll run through the rest of the process. So all in all, no matter if it's rural first side or farm credit side, we can get that done fairly quickly for you. And then from there, if they're successful, we're working on, appraisals, title work, and closing.
Sure. So you brought that up. Speaking of appraisals, do you guys, well, I know the answer, but you can explain it to us. But, Farm Credit come out and, a piece of property that I'm looking at, and they came out and did an appraisal. You can run us through, if through Farm Credit, through your own appraisals, the people that work for you. How does that system work?
Yes. So Farm Credit has a whole team of certified in-house appraisers. So they are certified and going through the education just as any other appraiser would, but they work specifically for Farm Credit and, full-time employees of this association. And so they oftentimes are the ones picking up our loans. Unless something is extremely specialized, we might have it done outside, of the company. But for the most part, we're covering our own appraisals. So once we're through the pre-approval process and we know that this purchase is moving forward, we will then have our appraisal team go out and appraise the properties. And so, normally that's somebody who will contact you directly because, we've put you in communication with them, and that appraisal happens. And then that appraisal, especially on the ag side, is good for quite a while, up to 7 years on our side. There's some caveats with that. If it has a house on it or something, that could change that a little bit. But oftentimes we can see appraisal be good for up to 7 years on our end. So we're not having to do them often. And then you're often getting a pretty fair price for that appraisal, maybe even more affordable than what you'd get if we used an external source. So it is really nice to have that appraisal team on hand.
So let me ask you this. So if your team of appraisers come out and they appraise the property, and as a landowner or as a buyer, I'm going to buy the land, and I think that the appraisal's too low, or I don't think maybe I had an appraiser come out before that or whatever, and we have a big difference. How would we work in a situation like that if we had I'm not going to say disagreement, but just if we had different opinion on what the property is worth, because we'll get into it here in a minute of the amount of money that you need to put down, from your appraisal to the loan amount and so on and so forth. So if we have a difference in opinion on your appraisal rate compared to the appraiser that I had hired, just say, to come out and do it, what's the scenario then? How do you work through that? Can you explain any of that? Or
Yeah. So this, there is a lot of specifics that would go into each deal that might run into this. I've truthfully never ran into this situation yet, but I'm sure I will at some point in my career. So let's say an appraiser comes out and it comes in lower than you expect. Well, if you're on the rural first side, so you're doing a residential or recreational property, you can always have negotiations with the seller. That some of that can happen, but then on the other hand, they also have a dispute form that you're welcome to fill out, and from there they can choose to do a second appraisal, things like that. On our side, while the appraisal certainly matters, it is not always the end-all be-all. So we have lending caps. So when we're talking about ag land, we have lending caps. So in this specific part of Indiana, this is not across the whole association, but in our specific part currently, those lending caps are $10,500 an acre. So that means for every acre we're lending on, the most that we can lend on that acre is $10,500 an acre. So that is not to exceed about 75% of the appraisal value. So if the appraisal could come in at $17,000 on a tillable acre, well, we're only going to lend $10,500 an acre there. So that kind of comes into the question or the conversation about down payment. Well, how much do I need? Well, knowing that that's our lending cap per tillable acre, that kind of gives you, okay, I can take 10 in this area, I can take 10,500 times the tillable acres I'm buying or the acreage I'm buying. And that's about what they can lend me, about what Farm Credit can lend me on this property. So from there, I'm either having a cash down payment or I am pledging additional farm ground, which can either eliminate or lessen the cash down payment. So we can always take additional farmland or additional land that you're willing to pledge and eliminate the cash that you need to put into the property. But I bring all of that up. I know that gets kind of into the weeds, but I bring all of that up because on our side, while the appraisal can matter and it does sometimes, knowing where farmland values are, especially in this area, they're high. And so usually that lending cap comes into play first before that appraisal value hits, if that makes sense.
It does. Yep, it does.
Kenzie,
And-
do you guys just do like farmland, or would you do like recreational hunting ground, that type of stuff?
Absolutely. We do it all. So when it gets into the recreational and hunting properties, if there's going to be an ag income, or there could be an ag income on that, it can come to the ag side. If it's purely recreational, it could go to the rural first side. So kind of the quick answer to that is yes. But I highly recommend, if that's the property you're looking at, which I know a base camp covers a lot of that type of property. I think the number one thing you can do is call Farm Credit and say, this is the property I'm looking at. Give us some details and we can direct you to say that better fits into the ag side or that better fits into the rural first side. We work together. We're on the same team. We're communicating on a regular basis, but it just kind of depends on who can specialize on what's, on that property specifically.
Do they consider farm income timber harvest? Or
Yes.
is that, so your timber harvest, if you bought a big piece of forest land or wooded area and you were going to harvest that every so often and so on and so forth, so that could be considered your $500.
Absolutely. So
income.
timber makes you eligible for Farm Credit, just the same as a typical tillable acre. So timber is very much an eligible aspect for us.
Nice. So Kenzie, let me ask you this on, I know interest rates, everybody's interested in the interest rate, right? And I know it fluctuates terrible from day to day, at times. So, I don't know, that's the hard thing. So, as of today, it's February the 10th or whatever it is. So as of today, it could change, not drastically, I wouldn't say by the end of the week, but it does fluctuate. So talk a little bit about interest rates if you can. I mean, just the 30,000 foot level of interest rates. And
Yeah. So Pat, you're exactly right. Our rates change. They are subject to change daily. The way that we are funded, our rates are subject to change daily. So what is accurate today may not be accurate tomorrow and may not have been accurate yesterday. So rates right now kind of hover between anywhere from 6 to 8%. It just kind of depends on the product you're looking at. But like I said, that's always subject to change. Now, it's not going to change 1% overnight, right? It's not that extreme, but it could go up 5 basis points or down 5 basis points, on any given day. We, of course, have seen those come up. Those have increased quite drastically over the last few years. And we always get the question of, are they here to stay or, will we see rates come down? The Federal Reserve is talking about, 2 rate decreases this year. But that can always change when it comes closer to time. We never truly know. So I guess I'm not expecting any drastic rate increases or decreases in the near future. So I kind of think we'll hover in this area, but something nice that we can do on the ag side with Farm Credit is, if we're working on a loan and we're working towards a closing, if we get to a low rate and we see that the next day they're going to go up, or we speculate that they're going to go up, we can lock that rate, and that rate lock is good for 45 days. So basically we can secure a better rate than what it might be on the day we close. That's not 100% success rate because rates might come down, but you're minimizing your risk by going ahead and locking it in. Then we can take that through closing and make sure we keep that good rate all the way through closing. And that's what your fixed rate would be. So, rates are a tricky one. They're not, we're coming out of the 2020, 2021 era. We're so low that now I'm kind of thinking we're finding ourselves in a little bit of what might seem normal from here on out. But, we're in a new administration. There's a lot of things that can always change that. So we'll see.
Sure. So what happens if an individual, gets a loan and they've been paying on it for X amount of years or, days or whatever, and the interest rate starts to drop? Is there, what's the refinance? I guess I don't know if you guys call it refinance, but, what do you do if it starts to go down? What do you do for your customers on that?
Yeah. So something that I love and got to experience, especially in that 2020 to 2021 era that I talked about, is we have the opportunity for conversion. So whether you have a loan with Rural First or Farm Credit, you are eligible to convert your rate once every 12 months. And so we have the conversion calculator. We'll help to see that it's, an advantageous move for you. Have rates come down enough to make it worth it? Or are you going to be saving, truly saving money over the course of time with this? But yes, once every 12 months, you are eligible for a conversion. And the beauty of that is it does have a small fee, but it is significantly less than what you would do if you went somewhere else and fully refinanced. There's no new title work. There's no new closing. It's just a fee for us to convert that rate. And that is then your fixed rate until the next time you're either eligible to convert or you want to convert. So you don't have to do it once every 12 months, right? You might wait 4 years before the right opportunity comes up. But I love that we have that benefit because a refinance can get quite expensive when you think about the title cost and the closing cost there. So with this, we're talking a much smaller fee, and we're getting you a better rate.
So as a loan officer and as a lendee, the person that's getting the money, is it up to the person that has the loan to call you and say, hey, I think we ought to, what's the interest rates we should drop, or does Farm Credit Mid-America, do they look at the rates and call the individuals? How does that work? I mean, is it up to the lender, or is it not up to the lender, but is it up to the individual that has the loan to reach out to make that happen? Or
it's a little bit of a mix, honestly, Pat. So when rates really dropped a few years ago, we were aggressively making calls because we knew that it was a huge benefit. And we were seeing, conversion opportunities for everybody. So at that point, we're calling to make them aware. We had conversion competitions to see how many we could convert. And a lot of those customers are thankful because they got on a 3 or 4% interest rate that could be fixed in for the life of the loan. Right now, we are tasked as financial officers and the rest of my internal team here in the office, and I'm sure every office would say this, but we are tasked to pull our conversion opportunities monthly so we can look at those conversion spreadsheets that are in our reports, and we can see who it makes sense for. And then we're oftentimes calling those people and saying, hey, we think, you booked a loan in 2022, rates were a little bit higher, and we could drop that down for you. So we do have customers that call in and they get on top of it and say, hey, I think it would be low enough where we could convert. But if they haven't already called in, we're going to find them on our reports, and we're going to be able to call them and talk to them about, we could get you a lower rate at this time. So it works both ways, but Farm Credit, we do want them to have the lowest rate that can possibly work for them. So we are pretty proactive about going out and seeking those conversion opportunities.
So Kenzie, talk a little bit about the patronage, how that works. You've said a few times in our conversation how that it's customer owned. So how does the patronage system of that work through your company?
So going back, I believe Patronage first started in 2012 for the Farm Credit system. So Patronage is essentially, when you're customer owned, the cooperative system believes in giving back a portion of your earnings to your customers. So, you may be familiar with other cooperatives, ag cooperatives. They would do something very similar in the form of a dividend, but we, over the past 9 years, so this will be our 9th year of doing patronage within Farm Credit Mid-America. Some other associations did it before us. This will be our 9th year giving patronage back. So what that means is we as a cooperative have been successful. So we have earnings that we can then give back to our customer owners. So as of last year, so in 2023 would have been our last patronage round, we gave $255 million back to our customer owners. Out of that $255 million, $61 million was specifically for Indiana. And then in the 9 years, or I guess 8 years, so not counting this year, we've given back $1.25 billion. So it is not a small amount of money. Typically, these customers, on a historical average, are seeing close to 1% back on these loans. Now, there is an equation that plays into that, right? It's your average daily balance. It's the interest rates, the fees you pay, right? So if you have a real estate loan, of course, that loan is large at the beginning and it shrinks down over time. But that patronage check, as a result, back to you in those beginning years of that loan are quite large. An operating line is different because you can revolve that, you can use it and then pay it back as you want. So the average daily balance on that is totally dependent on how much you used and how often you used it throughout the year. But nonetheless, a historical average has been about 1%. That is something that is determined by our board every year, what we will give back in patronage. So that's, of course, always subject to change, but it's stayed very steady over the last 8-9 years. And then this year, our patronage will be announced actually on Wednesday. So I'm excited to hear how much we're giving back this year. And those checks will typically go out in the middle of March. So that's a big week for us. We hand deliver a lot of checks. We send a lot of checks out, but it's a very exciting week for our customers because it almost feels like a little bit of a bonus that they can get back and use for something to enhance their property or just use it however they wish.
Nice. Yeah, that's a really good thing. So what happens if if as a land buyer and you already have a loan through Farm Credit and you want to buy another piece of property? Is there any kind of a discount, or how does that work? I mean, is there any upfront cost that you don't need, or since you're already established within the company, how does that work?
Yeah. So when you do your very first loan with Farm Credit, and I'm speaking on the ag side, which, like I said, we can do timber property, some recreational property, kind of depending. If it has a home on it, it's going to fall under rural first. But speaking specifically for the side that I'm working on, that first loan that you do, that is when you buy your stock in Farm Credit. So at that time, the stock is $1,000. I think it's been $1,000 for as long as I have known. I have not known that to change. But that stock is that then makes you a customer owner of the cooperative. So you pay that one time. So it doesn't matter how many loans you get or the size of the loan. That is a one-time thing. And that stock comes back to you upon the final payoff of your last loan. So on that first loan, you're going to have $1,000 stock origination, but then you'll never have that on another loan. So when you go into these next loans, you won't have that stock to worry about. You'll, of course, have your other fees. And, if it's real estate, you're going to have title work and so on and so forth. But that stock is a one-time thing. So if you're going into, let's say, your second purchase, something that's, helps and kind of simplifies the process. If you've done both of those deals with Farm Credit, right, is let's say you've done one and you've built some equity up in it. You've paid some of that off and you're buying another one. And let's say it's substantial and maybe would require quite a bit of cash down, but you don't want to do that. Well, we can always add on to the mortgage. We can always kind of cross collateralize that. We have a lot of flexibility when you're doing business with us and we know what your purpose is and what you're out to do. We have flexibility there to make that work. So we might be able to help from a collateral standpoint there, lessen that down payment. So it's not necessarily a discount, but it's a way that we can help, maybe from a collateral perspective. Or let's say you build up enough equity in your first property, and your appraisal is still good, it hasn't expired, we could maybe even just use that one property and allow you to keep one free and clear, which would then eliminate an appraisal cost for you. So of course it is all unique to each situation. So it really just depends. And it's all about the communication we have with the customer and what we know about the deal. But there's a lot of ways we can look at making it more affordable and minimizing cost. But those are just some of the ways that initially come to mind when I think about, going into that second or third deal you might do with us.
Sure. Yeah, that's all great information, because I know, we deal with some buyers, and, they're worried about, how much it's going to cost to get pre-qualified again, blah, 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 and you go through the whole system. And if you're already in the system, you have a loan with Farm Credit Mid-America or Farm, I'm assuming the other Farm Credits too, but that your information's in the system. And then there again, individuals like yourself, the loan officers can walk you through, and they try to save you as much money as they can on the front end and the back end, So I think that's one of the great things about Farm Credit Mid-America through the loans that I've, our family's had through it. And, we've gotten those patronage checks back, and it's, and you can either dump it right back in your loan, or like you said, you can make an improvement on something that you've been wanting to do, and so on and so forth. So I think it's a great thing, because you won't get that from your local bank, that you're paying a loan on. So it's a really good bonus, like you said.
Mm-hmm. That's right. And the nice thing about, once you're an established customer here, that first loan, we're asking for taxes and balance sheets, and we want to keep those updated, year over year. And when we do that, if we already have those financials at hand, we are so much quicker to help come to a decision for you. Because, let's say you call me and you say, I have a deal, but it's got to close, fast. Well, if I've already got your financials, easy, I'm putting in an application for you, and we can be done pretty quickly, but I can only work as fast as the financials I'm given. So when you are an established customer and you are going into that maybe second or third deal, if I've kept updated financials for you, we have so much more we can do, because we have history with you. And that just gives us flexibility. We want to work with everybody, but the more we know, the more flexibility we can have.
Yeah, because, this day and age of, things to go up for sale. And if you're not ready to purchase today, almost, that you're going to miss out, right? And even the property next door that your neighbor said they'd sell you for the last 50 years, and all of a sudden the for sale sign goes up in the yard and they don't talk to you about it. And if you're not ready, you're going to miss the boat. And so I think it's a very good thing. If you are looking for a home, or you're looking for a piece of property or whatever, you need to pick your lender. You need to, get your financial situation pre-qualified and ready to go, so you know what you can spend, right? And you kind of know how much of a down payment you're going to need, and because all that stuff, if you don't know it, is a huge surprise, and a lot of people don't realize, man, I didn't know I needed 20% to put down, even if it appraises for the, a piece of property that's under your $10,000 an acre, your 10.5 an acre, say something comes in at $6,000 an acre, and it appraises for, they want to sell it for $6,000, but it appraises for $7,500. You're already appraisal, right? You're already $1,500 more an acre than what they're willing to sell it to you for. So there again, that changes your down payment structure and how things work and how much, so like you said, every loan, every situation's different. There's no piece of pie that looks the same.
There is no cookie cutter situation. And that's why I'll reiterate it. It's just call Farm Credit, call your local office, and we can direct you in the right area, and we can give you the specifics. But that pre-approval, that pre-qualification is key, because then you can prep, right? You can have that money saved back that you need. On our side, that pre-approval is good for 6 months, and then we can renew it. We can keep that going as long as we need to. If it goes past a year, then we're probably going to want, a new set of taxes or whatever is needed at that time, but we can keep that out there. So you have to do the heavy work one time to give us those financials and get us up to speed. But once you have that, we can keep that updated for you. We keep that relevant. So you have that pre-approval, and you can say yes as soon as the right opportunity comes along.
So your types of loans, you have fixed rates, and do you have balloon payment type rates? And walk us a little bit about, the length of the loans and the structure of the loans at Farm Credit, that you can apply for,
Mm-hmm.
and maybe have a choice.
Yeah, so we have a wide variety of short-term to long-term loans. So we have an operating loan, which renews every year, but that, that is oftentimes for inputs or things like that, but it revolves. So you can take it and pay it back as it's deemed fit. We also have budget notes, so those can be out to 12 to 18 months, very, very short term. Then you get into your midterm rates, your 2-year to 10-year terms. But then that real estate, we can go out to 30 years. And very similar on the rural first side, they have construction products, they have shorter term products, but then they go out for that 25 to 30-year term too, for those residential and recreational properties that they specifically work on. So, there's a wide variety there. And, that's when, maybe the money down changes or it's all different based on the product you're using. We even have, for example, like a 3-year or 5-year adjustable product, which is it's fixed for, let's say we go with a 3-year adjustable product. It's 3 years fixed, and then it would adjust to a new rate on that 4th year and stay there for, another 3 years. But you could put that on a 30-year term. So if that's an advantageous rate at the time, we have that. It's not really a balloon payment. I've personally, at Farm Credit, have never done a product with a balloon payment. We can do fully fixed loans without needing to do that. But there's a lot of options. So, we'll talk you through those adjustable rates or the fully fixed rates, but there's a lot of comfort. I guess in my experience, a lot of comfort that comes for my customers with a fully fixed rate, knowing that we can convert it, right? So oftentimes that's kind of our bread and butter is maybe it's a 25-year fixed, and we'll look for conversion opportunities if those arise.
Yeah. I think that's such a great avenue, and there again, as we try to tell everybody, you date the rate, right? I mean, you stop and think about that, and you're not married to that rate. You can be if you never want to do anything about it, and you get in a loan for. It's kind of like my house loan, right? I mean, I'm below 2% on my home loan, but I'm married to that one.
You're
right?
married.
I'm going to stay married to it. I'm married to that one. But, as buying, this new piece of property when this goes through and there again, you're dating the rate, and you're going to just, have that point to where we can, refinance, not so much refinance it through you, but like you said, we can go back through and drop the interest rate if we so feel fit. And so I think that's just such a huge opportunity, and it's just a plus for, Farm Credit and Rural First to do that, because I've worked with our Rural First community here in our town for loans, and also through Farm Credit, buyers that I've had, and we've hooked them up with Rural First and Farm Credit to get their loans, and they've been nothing but completely satisfied with, everything that they've done through Farm Credit. And so I always get feedback from those individuals, and they're like, man, thank you so much for, pointing us in that direction. So what everybody does over there is just super. And I don't think that I've ever made a phone call or talked to anybody at Farm Credit or Rural First that wasn't friendly and willing to help, at any time. So that's pretty good.
Well, yeah, I appreciate that. And just to kind of put a plug in for our Rural First side too, which Pat, I know you're familiar with Rural First, but, a lot of times, let's say you're going to buy a recreational property that's, 5 to 10 acres. Well, there's some banks that just simply won't touch that. It's not your cookie cutter residential property, or it's just, it's a recreational hunting property. There's a lot of banks that just don't, that's not in their wheelhouse, right? So there's some nuance with those properties. Rural First and the ag side of Farm Credit, that's what we specialize in, right? We specialize in that residential property that might come with 6 or 7 acres, or so I just think that we do something very different that not every bank can do. And so while it fits a niche, we're niche. You have to have some rural tie to be a customer here. I certainly know that we all try to do our best to do that well.
Yeah. Yep. I think you do a great job. Both companies do it well. It's one company, but two,
Yes.
two silos within that
Easy.
company, what have you. But so what other than Rural First and, and the ag loans, and I know there's some other things that Farm Credit offers, I think there's insurance and some specialized financing. And so I know you're a loan officer, but I'm sure you know a little bit enough to be dangerous, and can explain a little bit about what else they offer.
Yeah. So the next really big thing that we offer, that is really, really growing within our company is our crop insurance. So we have a crop insurance team that they are all full-time employees of the company. So they are very specialized. Crop insurance is all they do. But that insurance team works alongside us. So just like I'm talking to my Rural First loan officer partners every day, I'm talking to my crop insurance partners every day. So we've had crop insurance for quite a while, but it's really taken off recently. And, they specialize. We work with a lot of, there's a lot of partners, so they have the ability to shop rates and help you get the best fit for you. But our crop insurance team is fantastic, and I would highly recommend them. And something that we do often is we take a team approach to everything. So, for example, in my area, I work a lot with Jessica Flora, who's on the Rural First side. So we never hesitate to go out and do a joint call together. Just like with my crop insurance team, I'll go out and do a joint call with my local crop insurance agent too. And, that way there's always a familiar face in front of our customer, or there's always somebody there that can try to best answer that question. But so we have crop insurance, and highly, highly recommend them. And then we also have what we call Ag Direct, which is essentially like equipment financing through dealerships primarily. So we can do it in-house, but if you've heard of Ag Direct, if you've gone to, buy a small utility tractor, or even, a larger tractor, or some type of, recreational piece of equipment, if you've gone through a dealer that carries Ag Direct, then you might have heard of us. But that is within the Farm Credit system that Ag Direct company is. And so that might be something that your listeners have heard of before too. But those are kind of the main things that we do: Rural First, Farm Credit, Ag, and the crop insurance. Then we also have the Ag Direct.
Yeah. So that's there again, that's a great opportunity for a land buyer. If they're purchasing some farm ground, and or they've got 2 or 3 different loans through Farm Credit, and they're farming and what have you, and you can dealing with the same people for your insurance and your loans, and it's kind of it can be a little bit overwhelming, as we all know, with all the passwords and people and stuff and everywhere you got to go and remember. And, and if you have kind of a one-stop shop, it's a great opportunity for anybody that's, that needs it, for sure. So.
Yes, absolutely.
Is there anything else, Kenzie, that you want to talk about on the loan side, or from Farm Credit, or anything? We've had a pretty good program here. We've covered a lot of things.
Yeah, I think we've covered pretty much everything that, I think are the main hitters, when we think about what we do and how we can best serve, your listeners and the customers that Basecamp works with. I can never say it enough. Just call in and we'll get you directed in the right area. We'll always get you to the right person. We'll listen to your unique situation and we'll help you work through it. But I think that covers most of it.
Great. So if somebody wanted to get a hold of somebody at Farm Credit, how, can you give us a number and maybe an email or something that they can reach out to, informational email? Or
yeah. So oftentimes it's easier to just Google, if you type in Farm Credit, it's probably going to give you, the most local office. I need to look up the Farm Credit. Actually, I think there's like a general number you can call. But, if you're not in the Farm Credit Mid-America territory, that number is going to be different. So I recommend just Googling, Farm Credit. That can pull it up. But if you go on to FCMA.com, so initials, that then can also tell you, where their locations are, give you the contact information. It can also give you a general email where you can even make a loan inquiry just through our general website. You can say, hey, I want somebody to reach out to me. I'm looking at a 50-acre purchase that's primarily woods that I want to hunt. Well, that inquiry will come to us and we will call you within 24 hours. That gets sent to the right person, and we call you and we start working with you. So I highly recommend just going to our website, and that will give you all the information. And if you're not in the Farm Credit Mid-America territory, your farm credit, your local credit, so maybe it's Farm Credit Illinois, will have something extremely similar.
Wonderful. Yep. I think that's great. Yeah. So anybody that's looking for a loan or some crop insurance, go to farmcreditmidamerica.com, basically, or FMCA.com. We'll get you there. And then, or you can just do farmcredit.com and it'll take you to where you want to go. Do a Google search. And I think we've had some really great information. We really appreciate you coming on the show today and taking time out of your day to help us understand some of the things that you offer through Farm Credit. It's been really nice. Thank you for coming.
Yeah, thanks for having me. I appreciate it.
Kenzie, thanks for coming on the show. Appreciate it. Pat, thanks for taking over the show as I had some technical difficulties there. I appreciate you doing that. Guys, don't forget to follow Farm Credit Mid-America everywhere you can. I'm sure they're on social media, their website, FCMA.com. Is that right? FCMA.com.
Yes.
And don't forget to follow Basecamp Country Real Estate. We're everywhere. You can find us on social media at Basecamp Country. Don't forget, here at Basecamp Country, it's more than just dirt. It's a lifestyle. Kenzie, thank you very much. Pat,
Thank you.
appreciate you both.
Absolutely, man. Glad to help. Glad to have me. Thanks for having me on.
You bet. We will see you guys next week right here on the Basecamp Country Podcast.